Hello, everyone. This is Todd Brown with Senior Insurance Marketing, and thanks for joining our webinar today. And today we're going to be talking about UNL, United National Life, and their great suite of products that they have. And to tell us more about these products, I have Hunter Gordy on with UNL. And Hunter, can you tell us more about the UNL suite of products that you guys have that are really competitive and also help fit the needs of the client?
Absolutely, Todd. Thank you so much. Yeah, so for everyone who's not familiar with us, we've been around since 1961, financially strong company. So just always feel comfortable when you're in the home talking about our products. So what I'd like to say is when we're coming out with products, Todd, we like to make sure that it falls into three categories. Number one, it's got to be easy to explain, right? Simple. So what you'll see is with our suite of products, we really concentrate on protecting the gaps in Medicare, right? The biggest liabilities, whether it's the hospital copay or home health care or dental and cancer. So that's what we've done. We've come out with 4 products that are simple, easy to explain. If you're talking about them in the house for more than 5-10 minutes, you're probably talking too much. So we know when you're going into homes, you're probably not going in specifically to talk about ancillary products, right? You're going in to talk about Medicare, or you're going in to talk about final expense. Well, so when we come out with these products, we want to make sure that it's just an add-on at the end of your conversation. So you don't want to take more than 5 to 10 minutes. The second thing, when we come out with products, if they have to have simple, easy underwriting. So we try to make our underwriting as simple as possible when coming out with products. And then thirdly, we want to make sure we compensate the agent extremely well. So nice comp on all these products with renewals. So what I'm going to do is I'm going to start out with our home healthcare plan. Our healthcare plan is it's a great short-term care to receive care in your home. It's easy underwriting. You will see there's only 2 or 3 questions, depending if you go all the way up to the highest level, the plan C, there's 1 additional question. So very easy underwriting and a really, really nice product that really sells itself. And I'll get into that here in a second. So let's start out with that home health care. Before you talk about home health care in a house, you've got to make sure that you create the need, okay? Most people are going to assume that Medicare covers everything, right? They've seen all their years of working that every paycheck they get, they're having a deduction for Medicare. So they just think Medicare covers everything, which we all know does not. And so we have to set it up, create that need. Otherwise, if you start talking about home health care before creating the need, it doesn't matter how good of an agent you are, they're not going to buy it because they don't think they need it. So how do you do that? You ask 2 questions. The first question you ask is, are you under the impression Medicare is going to cover your long-term care needs? Okay. Doesn't matter what they answer. They either answer, yes, I think Medicare is going to cover me, or they answer no. The second question you ask is, well, if you need care, would you rather receive it in your home or in a facility? Right? What are they going to answer? 99.999% of the time, they're going to answer in their home. All right. So that's helping establish that need that Medicare is not going to really cover it. And if they need the care, they're going to receive it in their home. Okay. So a couple important facts that are on our brochure highlighted in yellow. Medicare at most only covers up to 21 days, fewer than 8 hours a day, and fewer than 7 days a week for home health care. Okay. So it's not very much coverage, very limited. That doesn't even go into the fact of how difficult it is to qualify under Medicare, right? Because what does Medicare require? A 3-day hospitalization stay. And most ailments that are going to require home health care aren't seeing the patient in the hospital for 3 days, right? So, and you have to show continuous improvement or they're going to kick you out, all right? Secondly, you might have the objection that, well, you know what, this isn't going to happen to me. I don't need this because it's not going to happen to me. Well, 70% of people turning 65 will need this care at some point in their life. 70%. So if you're talking to a married couple, there's a 91% chance that one of them is going to need this care. So it may not happen to them, but it's very likely that it's going to happen to one of them. There's a 49% chance they're both going to need it. Okay. Thirdly, if they don't get this covered, it can cost them over $50,000 a year. That's the bad news. Medicare is not going to cover you. It's probably going to happen to you. And when it does, it's very, very expensive. The good news is we can take care of it with our home healthcare shield. The one thing I like to point out, we do not do what Medicare does and require a 3-day hospitalization stay. We eliminated that when we were creating this product. Most short-term care plans follow Medicare and require a 3-day hospitalization stay. Not us. We do not require that. How do you trigger benefits for our plan? As long as you cannot perform 2 out of your 6 ADLs or you're cognitively impaired, you will trigger benefits. All right, let's get into this plan. It's 4 parts. Part 1, the meat of the plan. You're going to get 360 days of coverage. Okay, so it's a short-term care plan, 360 days. Let me be clear, you only use one of those days when somebody comes to your house to perform a service. So it's not once you go on claim, 360 days later, it's over. You only use one of those 360 days when somebody comes to your home. So if somebody comes to your home every other day, this plan is going to last 2 years. If they come every 3rd day, 3 years, so on and so forth. All right. So you have 3 different options. You have plan A, plan B, and plan C. Plan A, you get $150, you get up to $150 in daily benefit. Plan B, $300, and plan C, $450. So let's take a look at plan B. That's the one that is sold most often. Why? Well, because it's in the middle, pretty much. Anyway, so plan B. If you use this for all 360 days and maximize that daily benefit of $300, you're going to get your client over $100,000 in benefits. All right. What are the benefits? You can see right there, you got skilled nursing, general nursing care, physical therapy, speech pathology, occupational therapy, chemotherapy specialist, interostomal therapy, respirational therapy, and medical social services. All right. When you're talking to your clients, do not do what I just did. Do not go line item by line item by line item, because you're just going to confuse them. All right. And I don't know what confused people do every day. I do know they don't buy insurance. Right? So keep it simple when you're talking to your clients. We got a great plan here. I'm going to work with you to show you a way we can make this thing last multiple years, get you over $100,000 in benefits. We're going to take care of your skilled nursing, your physical therapy, your occupational therapy, and all this other stuff that you can see here. All right. Also, if you have somebody come to your house that doesn't fall under one of these specific categories, it's okay. We're still going to protect you with that general nursing care, and then move on to the next part. Okay, keep it simple. Part 2, you use short-term home healthcare aid. We're going to give you 60 days for a certified short-term home healthcare aid at either $40, $80, or $120 per day. Part 4, restoration of benefits. This plan will restore in full an unlimited amount of times as long as your client, or as long as the policyholder is healthy, for 180 consecutive days. All right. So if they use this plan up, then they get healthy. Their practitioner certifies that they've been healthy for 6 months. The plan will restore in full. So you get over $100,000 in benefits in part 1, get about $5,000 in benefits in part 2. And in part 4, this thing can restore an unlimited amount of times. Okay. This is before even going into part 3, which in my opinion is what can help you sell this plan. Okay. All of those benefits is going to cost a 65-year-old just over $47 per month. Okay. Remember that number. Why? Look at this part 3. UNL is going to pay a benefit amount of $10 every time a generic drug is filled, or $25 every time a brand name drug is filled, up to plan A, $300 per year, plan B and C, $600 per year. So if you have a client who is on plan B and they take 2 brand name drugs and get them filled monthly, that's $50 every single month, which equals out to $600 for the year. So $50 every single month. How much did this plan cost? Not quite $49, not quite $48. So this plan, if they use this prescription drug benefit, which every policyholder gets from day one, will pay for the annual premium. It's a no-brainer. It's a no-brainer. And it's incredibly easy to file the to get this prescription drug benefit. There's no claims form. You literally have your client, policyholder, goes up to the pharmacy, asks them to print the drugs they've taken over the last however many months. I recommend they do it annually. The pharmacy will print that out. They'll hand it to them. You send it to our claims department. That's it. Incredibly simple. And we pay our claims quickly, usually 2 to 3 weeks. All right. So that's the plan. We've got a couple riders that I like to point out, mainly this easy issue accident and sickness hospitalization rider. This plan, this is basically a hospital indemnity rider. All right. So you're probably thinking, well, why would I get a hospital indemnity rider when I can just write a standalone hospital indemnity plan? Well, believe it or not, in 2020, there was about 22 million people that had MA plans in America. This year, they're predicting between 26 and 28 million. Out of those 22 million people, only 3% had a hospital indemnity plan. Amazing, right? Why is that? One, either agents aren't talking about it, or two, they can't qualify because of underwriting, health questions. Remember, this plan has very limited underwriting. Okay, so even if they couldn't qualify for a standalone hospital indemnity plan, they very well probably can qualify for this plan, and then they can get this rider tagged on. Okay, so you can see what it is, depending on what base plan you go with, is the will help determine how much money you can get per day for the hospitalization stay. Always add an ambulance rider to a policy. It doesn't have to be ours, but just do your clients a service. Make sure they get an ambulance rider. They're very inexpensive, and they will pay for, if you ever have to use it, it will more than pay for the premiums that you've paid. All right, so rates. As you can see here, this is attained age pricing. You can get this plan at 61 years of age and up to 85. If you go with option B and you're 65 years old, it's $47.41 per month. All right. They will pay that premium every month until policy renewal when they are 71. So when they are 71 at policy renewal, they will go up to the next age band. All right, that's what attained age pricing is. Then you have the monthly rider, the accident and sickness hospitalization rider. Just some quick math. If you're 65 years old and you go with option C for the base plan, and then $300 per day for 6 days for the rider, after you take out the $600 that they're going to get back because they're taking prescription drugs, the plan, it equals out like net to just under $30 per month. So very nice, affordable, going to take care of your home health care and your hospital copay. All right, Todd, any questions in the chat for our short-term home health care plan?
I don't see any questions. If if you have questions, just put it in the Q&A box there, and I'll be happy to. I'm monitoring that, and we can read off your question, and Hunter can answer it. So I don't see any right now. So yeah, let's go to the next product.
Perfect. All right. Let's look at dental insurance. The one insurance people actually want or ask for, right? Everybody asks for dental insurance. Usually, back when I was an agent, if somebody asked me if I had dental insurance, I usually told them I have it, but you don't want it, because most dental plans are not the best. They can be kind of deceiving because you remember as an applicant that you heard 80%. Well, in actuality, most dental plans don't pay that 80% year one. They have the tiered approach where it takes a couple of years to get up to 80%. When we came out with our plan, we decided we weren't going to do that. We were going to pay 80% for year one, and we're not going to mess with usual, customary, and reasonable charges, right? Usual, customary, and reasonable charges are what a lot of dental plans actually pay their percentages on. What does that mean? Well, usual, customary, and reasonable charges are almost always less than what the policyholder actually paid at the dentist. So what we do is we do 80% of what they actually spend. There's a $100 deductible, annual deductible, and you can choose between three benefit levels: $1,000, $1,500, and $2,000. I always recommend going with the full $2,000 benefit plan because it's like $6 a month more than the $1,000. So for $6, your client's going to get double the benefits. We have no networks, right? This is an indemnity plan. So once you get this plan, you can go to any dentist, you pay the dentist, and then you file the claim. No claim form, just send in the bill to our claims department, and we will send a check directly to the policyholder, right? No networks. That's big. You can have your standard waiting periods that most dental plans have: 3 months waiting period for your x-rays, your 2 dental cleanings, and your basic eye exam. You get up to $75 for each cleaning, and up to $50 for that eye exam. After 6 months, you're going to get $150 in prescription eyewear or contacts and most of your basic dental care. And then after 12 months is going to be your major non-cosmetic dental care. All right, so pretty simple right there when you're talking about the waiting periods. Sorry, I'm trying to access. There we go. All right, rates. Monthly premium rates. This is issue age. So whatever age you lock in when you apply for this coverage, you keep that rate forever. If you're looking at a 65-year-old, they're going to pay $46.33 per month for the $2,000 benefit plan. As you can see, the $1,000 benefit plan is $40.33. So for $6 more a month, you'll get double the benefits. That's why I highly always recommend doing the full $2,000 benefit level. All right, third product that we have that I'm going to share with you is our standalone hospital indemnity shield. As I mentioned earlier, only 3% of Medicare Advantage policyholders have a hospital indemnity plan, which is amazing considering one of the biggest liabilities of an MA plan is that hospital copay. So what did we do? How did we differentiate from the rest of the market when it comes to hospital indemnity plans? We made it simple, okay? We decided to take out all the fluff that comes along with a lot of hospital indemnity plans. And we just said, okay, how many days, calendar days do you want for the year, right? You can choose between 3 and 10 days. This does not reset after 60 days of confinement. The benefits restore every calendar year. So I always recommend going to the full 10 days. That way, if most copays are 5 days, if you choose 10, you are going to cover 2 full copays. You can choose between $100 and $600 per day. You can add on the ambulance rider to this one, or you can go to the skilled nursing facility benefit. The skilled nursing facility benefit goes in after 3 days of hospital confinement. You can choose between $100, $150, and $200 per day for 80 lifetime days. We put a 20-day elimination period on it. We know Medicare is going to cover skilled nursing for the first 20 days. So we make that our elimination period. Day 21, this policy kicks in and it will cover the next 80 days to make sure you're covered. All right. This plan is one of the least expensive plans on the market. All right. And in a second, I'm going to go into our e-app and show you a couple of examples of how to do it. It's very simple. But if you're a 65-year-old and you get $300 per day at 10 days, it's going to cost you less than $16 a month. So very, very inexpensive. And then the last plan we have is our Cancer Shield 2.0. Okay. Our Cancer Shield 2.0 is we basically took our old Cancer Shield, the original, and we simplified it. For those of you that sold the original cancer plan, the brochure was like 15 pages. It had a ton of benefits that really most of them weren't used. So we took the plan, we looked at the benefits that policyholders were actually using, we kept those, and we beefed up the benefit levels. So they're going to get a little bit more money. And we created a new plan. A couple of things I like to point out when it comes to cancer. Most seniors are going to think that Medicare is going to cover everything, but they're not, right? People who are on Medicare are spending tens of thousands of dollars outside of Medicare if they get diagnosed with cancer. It doesn't cover everything, okay? Additionally, cancer, we all know, sucks. Everybody knows somebody that's had cancer, right? 1 in 2 men are going to get cancer in their lifetime. 1 in 3 women are going to get cancer in their lifetime. Totaled out, 3 in 4 American families will get cancer in their lifetime. It's terrible, right? Usually, I always like to ask the client, obviously, if they know anybody that's had cancer, right? And usually, if you're an agent and the client's trying to blow you off when it comes to cancer insurance, they might say, well, cancer doesn't run in my family. Right? We've all heard that. Cancer doesn't run in my family. Well, that's where you can point to this quick fact. Well, did you know that only 10% of cancers are hereditary? So it doesn't really matter if it runs in your family, okay? Because only 10% are hereditary. It's a great way to deflect that pushback that you may get from your client. All right, the policy itself. We're going to pay some benefits for experimental treatment. We're also going to pay for their annual screening for cancer. There's 3 different options, Plan A, Plan B, or Plan C. This is a scheduled benefit plan where you can add on a lump sum rider, okay? I love this plan as opposed to a purely lump sum plan. The reason being, if you get just a lump sum plan, that's a finite amount of dollars, right? You buy a $10,000 lump sum plan, that's $10,000. Once you use it, it's gone. With the scheduled benefit plan and the rider added on, the lump sum rider added on, you can have that lump sum out here to the side and not have to touch it while you fight this terrible disease, because you can use this schedule and get the funds as you fight it while having that lump sum out there as a case loss of income or whatever you need it for. But you won't have to use it to fight the disease because you're getting paid from this schedule of benefits. All right, the first part is we're going to pay for your hospital confinement as a direct result of cancer. And this is a really cool feature here. The non-local patient transportation benefit, as well as lodging, not only for the patient, but also for the family member. What does that mean? Well, over the last 20 years, the United States has gotten a lot better at fighting cancer. We've had breakthroughs in treatments. The problem is that hospital may not be in your backyard, right? So you might not have access to that hospital that has these great treatment plans because it's not local and you can't afford to go to that facility. Well, with this, you can, right? This policy gives you access to be able to get there and stay there. Really cool, not only for you, but also for a family member. Pretty awesome. Then you get into your cancer specific treatments. You got your chemo, your chemo, radiation, your surgery, your skin cancer, your transplant. You can see all the different benefit amounts. Like I said, there's 3 different options. And then you see that lump sum rider. So the lump sum rider, if you choose plan A, you can get between $1,000 and $20,000 for the lump sum. If you choose base plan B or C, you can get between $1,000 and $30,000. Right? First diagnosis, you'll get that cancer, you'll get that lump sum check. Pretty cool benefit here. You are eligible for full restoration after a 5-year period of remission. Right? So you get diagnosed with cancer. You use this benefit level, these benefits, this schedule of benefits to fight it. You had a $10,000 lump sum. So you got that $10,000. You beat it. Right? You beat it. You get great treatment and you beat the cancer. Unfortunately, 5 years later, it comes back or a new cancer appears. You will get that check for the lump sum again because it would have restored due to a 5-year period of remission. All right. And then you also have the option to add on the return of premium. And that is a simple return of premium. You get back all premiums paid minus what's been paid out upon death. The back of our brochure, you can see what a first year of benefits paid directly to you, what might look like. Really cool. You can just kind of see there if you had a plan C with a $30,000 lump sum, you went to the hospital for 10 days, you flew to get the facility for you and your family. You had chemo 1 time a week over 4 months and radiation 5 times a week over 2 months, and then you had a surgery. In that scenario, if you had plan C, you would be getting over $86,000 directly to you. All right. All right. Todd, any questions so far?
No, I don't see any questions in the Q&A box. If you do have any questions, please put it in the Q&A box. Also, the Ask the Mail online is a great feature as well too on that cancer.
What's that? Sorry.
The Ask Mayo Clinic online.
Yeah, so
access to.
That's a good point, Todd. So we every single one of these Shield products, we throw in the Mayo Clinic. The access to Ask the Mayo Clinic online. So it's a great feature. Every one of our customers has heard of the Mayo Clinic. What is it exactly? It's pretty much like a good WebMD, right? You get access to their website to ask them questions, to look up diagnosis, to look up a whole bunch of stuff. Just like WebMD, but it's run by the Mayo Clinic. It's Mayo Clinic online. It's a great feature, and you get access to that with any of the policies that you buy through our Shield series. All right, let me get into the app. So there's 3 different ways to submit applications to UNL. You can always do a paper app. You can log into the agent portal, which is what I'm doing right now. Or what I recommend is you get on your smart device, whether it's a iPhone, iPad, Android device, and you download the e-app. Okay. Why? Well, if you download the e-app, you can have the client, the applicant, sign directly on the e-app with their finger on either the phone, whatever the touch screen device is. They can actually sign it. So if you do that, you do not have to do our phone verification. Phone verification is cool for if you're remote and you're selling over the phone and you can't get their signature, you can have the client call into our phone verification system and answer 10 questions. It's not health questions. It's literally just identifying who they are, what product they're buying, who their agent is. And that will count towards as their signature. But if you do it through the e-app and you can actually get their signature with their finger, you do not have to do that phone verification. So when you log in here, you're gonna, eventually it's gonna pop up. You will have different options. You see here, quote and submit. So you click on quote and submit. You put in your applicant's names. their birthday, their state, click next. And you're going to have an option to select monthly, quarterly, or semi-annual or annual billing. Make sure you collect the correct one. If you want to do a direct bill and not the auto draft, if you want your clients to be able to write a check, they have to do at least a quarterly billing. All right. So make sure that you are selecting the right payment schedule. So here you go. Cancer 2.0. Let's look at that real quick. Click on Cancer 2.0. It's going to ask you for chart, so height and weight. And then you see here your options. So let's say you go with option B. Then you want to do a lump sum. So option B, you see right there, $37.83. Right? That's with 0 lump sum. You can do a cancer, or you can do a cancer, heart attack, and stroke lump sum option. And here you can select how much cancer lump sum they want. Let's say you want $10,000. It's automatically going to calculate the premiums for you. Let's say you don't want to do return of premium. And there you go. You go to the top and you can see the total cost per month for this plan, $68.02. All right. So you can go in here and you can fit this to fit, you can adjust this to fit your client's budget. All right. Let's say that $68 is just too much for them, but they really want some of that lump sum. So how do you adjust it? Well, maybe you go in here to option A. There you go. Go option A. They still want $10,000. Say their budget was $50 a month. Now you have put them under that $50 a month, right at $47.45. So really cool app, quoting tool to be able to sit in front of your clients and get them what they need that fits their budget. All right. Let's look at the hospital indemnity shield. Same thing. Height and weight. They decided that they want 10 days, $300 per day. $14.30. Throw on the ambulance rider. Now you're looking at just under $18 with the ambulance rider. All right, so very inexpensive. Without the ambulance rider, $15.90, just under 16. So I wasn't lying. So $15.97 for 10 calendar days for the calendar year at $300 per day. So very inexpensive, a great way to get coverage for your Medicare Advantage policyholders. I want to show you real quick the health questions for our home health care plan. We go back in here, we do our home health care. We select option B. We decide that we want we'll just do quickly, just option, let's do option C so you can see the additional question with option C. I'll explain that when I get there. All right. I want to apply now.
Hunter, we have a question. Is there a family discount for any of the products?
There's not. Every single plan is a individual plan. You will notice in the app, you can always add a spouse and do it on the same application just to cut down on the amount of information you have to put in, but it is not going to give you a discount doing that. All right, let's not let me do this. Let's let me get the paper app out real quick. All right, so two questions if you choose option A or B, one additional question if you choose option C. What are the questions? I'll tell you in a second when it pops up. The beauties of working from home right now. Slow internet. All right. While it pops up, I'll just kind of go by heart. So the first question is, oh, here we go, right when I start talking. The first question is the applicant currently in a nursing home, assisted living facility, or receiving home health care or similar type of benefits? Question 2, is the applicant unable to perform routine activities of daily living or cognitively impaired? If you choose option A or B, those are the only two health questions. All right. If you choose option C, there's one additional question. In the next 60 days, does the applicant expect to be admitted to a hospital, nursing home, assisted living facility, or require home health care services or have surgery? So I'm sure every single one of you that has tried to put a client into a hospital indemnity who wasn't able to do it because of health questions could go back to them and get them a home health care plan with the accident and sickness hospitalization rider with these underwriting questions. Very simple, right? If you use the e-app and you submit these, you'll probably get the plan approved before you walk out the door, right? Straight through processing on most of our applications for the home health care. So it's a very quick issue, very easy underwriting, and you're going to protect your clients. All right, that is UNL in a nutshell. Todd, do you have anything to add?
No, I mean, it's great products, as you can see, and also very simple application process and coding process as well too. So if anyone has any more questions, please put it in the Q&A box there. I'd be happy to answer it for you. If you're not contracted with UNL, give us a call here at Senior Insurance Marketing. Our phone number is 877-800-3080, and we will be happy to get you contracted with UNL so you can start writing these great plans for your clients. Or if you already contract with the UNL and need some assistance with a quote or need app rates, brochures, whatever, feel free to give us a call. We'll be happy to help you out as well too. Hunter, I don't see any questions in the box here. So again, thanks for showing us the suite of products from UNL. Really appreciate it. And again, give us a call here at Senior Insurance Marketing. Our number is 877-800-3080. And we're here to help you grow your business. And take care, everyone, and have a great day.
Thank you.